New Holdings, which is a digital financial services company based primarily in Latin America, reported quarterly financial results that sent the stock price up by more than 10% in the aftermarket hours. Of course, I'm happy about that. New Holdings is a stock that I've been recommending as a buy for a few years now, and one that I've rated as something that's undervalued at current market prices. So in this video, I'm going to review the company's latest financial results and update my recommendation whether I think it's a buy, hold, or a sell. I'll share with you my proprietary discounted cash flow valuation model for New Holdings, which calculates the fair value for this stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Right, so New Holdings reported that the results in Brazil continue to impress. It now has 107 million customers and more than 60% of adult penetration in Brazil. So that's the strongest market, and it's expanding into new markets like Mexico and Colombia. So New is in the early stages of building a full-scale retail banking platform in Mexico, surpassing 12 million customers. And in Colombia, it's approaching an inflection point with nearly 10% of the company's population now as a customer. But not only is the company increasing the number of customers, it's also increasing the engagement per customer, which is a good sign of a good customer value proposition, which is one of the most important of the 6 steps I look at when I'm evaluating a stock. The monthly average revenue per customer reached $12.20, which is up 18% year over year, while the cost to serve each of these customers remained stable. In Latin America, total deposit reached 36.6 billion this quarter, and that was up by 41% year over year. And that's great for a company like New Holdings, as I talk about with other companies and financial companies that do lending services, because the cost of those deposits is lower than if the company were to get money from warehouse lending facilities, other investors and lenders to lend to their customers. When customers are providing the deposits to make loans, those are the lowest costs of funds that a business like New Holdings can generate. Another company that's benefiting from a similar trend with increasing customer deposits, decreasing the cost of lending is SoFi. SoFi is another company that I follow that is benefiting from a similar trend line. The management team went on to say that they're expanding their customer base to nearly 123 million, with over 4.3 million net additions in the quarter. Revenue increased by 4% in Q2 2025 compared to the same quarter last year, and they generated a record $3.7 billion. As they said earlier, they welcomed 4.1 million new customers during the quarter, and that was a 17% increase. And coupled with the fact that they also increased the average revenue per customer, those are impressive trend numbers. As I talk about with many businesses, it's more difficult to increase your average revenue per customer when you're adding new customers, because those new customers are not as familiar with your platform, they're not as familiar with your company, and they haven't learned all of the different things that you offer. And so they're not as engaged as a customer that's been with you for 3 years, understands your platform, understands the services you offer, and branches out into newer services as they get acclimated and more comfortable with your company. So when you're adding so many new customers and increasing your average revenue per customer by as much as New Holdings is, that's a truly impressive sign of how customers value your value proposition. So this is something that I've been looking at very closely with New Holdings. It's asset quality indicator. And this is a measure of the defaults in its loan portfolio. And it tells me the quality of the loans, the quality of their due diligence process, how are the defaults in their portfolio. And I was happy to see that the 15 to 90 day ratio for the Brazil consumer credit portfolio declined by 4.4%, meaning there were fewer people in default. And that's a good sign. That's a 30 basis point improvement versus the prior quarter. And I was actually expecting this to worsen because of the geopolitical tensions. Remember, President Donald Trump has increased tariffs on all worldwide trading partners of the United States and many of the countries around the world, including in Latin America, especially Brazil, depend on the United States for their exports. And so I was expecting a slowdown in the economy, and there was a slowdown in macroeconomic growth in Latin America, Brazil, everywhere, United States, everywhere economies are slowing down. And when economies are slowing down, that means less jobs are being created. That means more people are getting laid off, fewer hours of work available, which then could lead to people missing their payments, missing their credit card payments, missing their mortgage, their car, their personal loan, missing payments and defaulting more frequently. I was concerned about that for Nubank, but I was pleased to see, surprised to see even, that their quality indicator improved. That's a good sign. It's a good sign that worldwide economies are not experiencing dramatic slowdowns, even though they are slowing down. It's nice to see that the slowdown is measured. In nearly all parts of the world, they are slowing down in terms of decelerating their growth rates, but those decelerations are measured. Economies are not collapsing. Worldwide economic growth is not collapsing, even though there's been a surge in trade barriers and less activity and less trade between countries. Net income increased by 42% to 637 million. So you have revenue increasing 40%, net income increasing 42%, 4 million new customers being added, good progress in the new country development. Lots of good to like here from new holdings in the most recent quarter. So now that we looked at performance, let me share with you my proprietary discounted cash flow model. I calculated this business is worth $20.26. The current market price is $12. This is before the aftermarket increase. It's now trading closer to $14. But still, you can see even at $14, the stock looks undervalued compared to my intrinsic value per share calculation for new holdings. And this is partly why I've had this stock rated as a buy all year long. So I last updated new holdings, my recommendation for new holdings on April 29th, 2025. And at that moment, recall that's right after, soon after President Donald Trump announced those tariffs on the worldwide trading partners. And I became a little concerned about new holdings and how its business would hold up and how the Latin American economies would hold up given the increase in trade barriers and given how much the Latin American economies are dependent on exports and trade. And so I placed this company as a borderline buy. But now that I've seen early results both from the Latin American economy and from new holdings specifically, I'm comfortable with the rate of slowdown. And so I'm upgrading this stock to a full-fledged buy, up from a borderline buy, and I'm updating that recommendation today, August 14th, 2025. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.